Hi everyone, and welcome to the next episode of the HeelanHub podcast, the show for small business owners. I'm Dan Heelan, and on today's show, I want to talk to you about some very painful changes that are coming for the UK self-employed and landlords of you out there. If you're a limited company owner, it's not going to be too much detail for you in this one, other than to say that these changes are meant to be coming for you eventually. However, with everything going on at the revenue, I think that's going to be some time. There's no immediate kind of roadmap to when that might be, but it's probably worth listening in just so you're aware of the changes. So let's get on with it. Now, as you'd imagine, as a person that runs a business accountancy working with owners, tax returns and HMRC stuff is something we do every day. Now, what that looks like at the moment is that every year on the 31st of Jan, a self-employed person has to do a tax return. There's a free online tool they could use that the revenue provide. And for some people, they'll choose to use that. And for others, they'll use an accountant. But of course, it's a once in a year event. Forgetting VAT for a minute, and anything else that you need to do, that one tax return is going to be once a year. And the big changes that are coming are going to change that. So in this podcast, I'm going to be talking to you about what those painful changes look like, what you need to do, how to prepare, and some words, of course, on can you and how you could avoid it. That's always an interesting topic. So I think what I want to touch on first, though, is you might be thinking when I'm talking about this, I mean, if you've listened to the podcast, I've talked about this for sure over the years, but we've not been jumping up and down about it. But I can see that it's becoming more mainstream now, mainly because revenue have written to people and told them that this is coming. So you might be thinking, well, why has nobody been talking about this? And a lot of it's going to be driven by software providers, and you might think accountants. So for software providers, there's obviously very vested interest, as we'll talk about, because you're going to need some software to do this. And that's something we're going to touch on in a lot more detail later. But so they're driving a lot of the communications and have been. And a lot of that communication has been driven into the accountancy world. The problem is this new program, it's called Making Tax Digital. It used to be called something slightly different. There was always Making Tax Digital, but they keep putting bits on the end. But most people just know it as Making Tax Digital. This already exists for VAT, so don't get the two confused. This is Making Tax Digital for income tax. And everybody thought basically it's not going to happen. They've been talking about it since 2015. It seemed such a bad idea then that nobody thought it was going to come in. This is in the accounting industry. I didn't believe it until I literally sat in an office with the Director General, I think is his title, of HMRC, and he told me himself that it was coming. I was like, okay, now we need to start talking about this. And you've seen the letters if you're one of these people that's going to be affected. So it is there. And the biggest challenge with accountants talking about it right now is that nobody actually understands very detailed how it's going to work. I'm going to explain to you in a minute the general process and what we know to be true and the easy bits, but particularly where the end of year submission is going to be coming. Nobody really knows. So I think for a lot of people at the time recording, it's hard to speak on authority with it because there's, like, from an accountant's point of view, there's very technical things that haven't been answered yet. So bear that in mind. And at the time recording this video in the middle of 2025, in the middle of a heat wave, oddly, there's only been 162 submissions based on a Freedom of Information request in the pilot of the system. That's how untested this is at the moment. Yet it's going to be affecting many business owners on the 6th of April 26, so next April. So it is coming quick. You've got to do something about it. So even the software companies, I think, have still got questions around this. I mean, we've done trade shows and the like, and I've been asking them, and they're like, yeah, it does this. And I'm like, yeah, but what about this, and this? And they still can't tell me. Anyway, lots of stuff to talk about. And I'm sure, absolutely for sure, we'll be doing more deep dives into this as it gets closer, particularly I think around what kind of software solutions you could use, because right now I've got some favorites, but I think it'd be cool maybe even to show you and talk to you on the podcast about more in-depth tutorials there. So we'll be doing that. So let's talk then about what the changes actually are. And before we do that, just a reminder that we have been throwing these shows up on a specific YouTube channel. For many of you might be aware that we have a main YouTube channel at Heelan Associates, but we also throw these ones up at the HeelanHub. You can go there and you can see me rattle on at the camera and half talk to a laptop and half talk to you. But the cool thing about that is you can go there and you can comment and interact with us. It's a good way to kind of ask any questions you might have and get some answers. And I presume this one will be of interest to many of you. So please do go and visit that. And of course, like, subscribe, and all that kind of YouTube stuff that we'd ask you to do. So what are the changes? Well, right now, as we say, we have this tax return, which is done once a year. What's changing is we're moving into a system where you're going to have to submit quarterly digital, get my words out today, quarterly digital tax returns, and then a final submission that looks and feels a bit like a tax return. I think the revenue are going to pains to say this isn't 5 tax returns, and I've certainly used those words, 5 tax returns a year, because we want eyeballs on this stuff so that people are aware, but it's not really tax returns. Actually, what's going to change is how you keep your records and then what you're going to have to do. And the fact that you're moving this annual touch point to what is now 5 touch points a year, and I could show you it could be more than 5, as we'll talk about in a minute. So what's going to happen is these quarterly returns. So I'm going to talk to you in a minute about whether you're going to be in this system, but let's just presume for now that you are, because for most people, most owners I'm talking to now are going to be in this for sure. It's just a matter of when. Now, you would do your quarterly return. So let's say your tax year starts, and you can pick, actually, they've allowed you to pick. The tax year technically starts on the 6th of April, but you could do 1st of April to the 30th of June. So you do your first quarter. You've now got to have some sort of software to keep digital records. You're going to go in and update it on there. And then they give you a month and 7 days to go and submit that return. So how it is practically going to work is you can log onto your software, probably categorize all of your transactions. Most of these softwares have like a bank feed that comes in. So you go in, categorize all your things, and then an account for any maybe cash sales, and if you're a cash-based business, and then you click a button. The actual submission is probably just going to be a click of a button. That bit I don't think is going to be too difficult outside probably setting it up, knowing the revenue system, so there might be some challenges there. So that bit's not too difficult. And then at the end of the year, what's going to happen is I'm going to do a final submission, because all they're asking for on these quarterly submissions is income and expenditure. It's not a lot. And they're allowing you to just replace it next time if you've mucked it up or made an error. So you can go through all that, and then the final sort of one at the end of the year, you're going to make adjustments on there and talk about other income. That's the bit that nobody's 100% sure yet how it's going to work, and the various software providers also work differently, and I'll touch on that in more detail in a minute. So just know that that's there. But the big kicker here is there's no free HMRC tool. There are some software providers already talking about free versions, but like all free versions, we know what they're like. There's likely going to be capped for certain things that you can't do. So looking for software is going to be important, as we're going to talk about in a minute. But that's what you're going to have to do. You have to change your workflow. So I'm think back to many of, say, our taxi drivers and salon owners or mobile hairdressers. At the minute, they might just write down what they took in a book every day, and then once a year they go and total all that figures up, or they give it to us and we total it up and put it on a tax return. Can't do that anymore. If you fit this criteria we're going to talk about in a moment, you actually now going to have to do these digital record keeping and submit a button. I'll talk to you about how you might do that. But do know, you're just looking for income and expenditure. So it is impactful for sure. But it's not necessarily like 5 whole tax returns where you've got to get every income source in on those returns. So it's going to be that bookkeeping process that's going to change. Now, the kicker here is if you're a landlord and a small business owner, you've actually got to submit for your property income and for your self-employed income. So you're going to have to do really 8 quarterly submissions between the two, and 1 final year. So it's like 9 returns. So there is some quirks to this where, depending on if you've got these other things, it could be a few more submissions. But again, software providers are adapting to this. It's a movable thing at the moment, but we're thinking that you might be able to do it through one piece of software depending, but they all work in different ways. That's been a big question from the beginning. This is what I'm saying about some of the unknowns. And of course, with anything with HMRC, if you don't do it, there are going to be penalties. But I think everywhere HMRC have said, like quite publicly, I've seen online on LinkedIn, for example, the director of the Making Tax Digital program has been very actively commenting out there, and the public actually love this from them, their public engagement. And they've openly said, look, we want to work with people to get this right. It's a light touch approach on penalties. Give us feedback, test it, we'll work with you. And having met some of these people, I just think they're cool. They're obviously invested in it. Whether you think it's a good idea or not, and we'll touch on that in a sec, is a different subject, but the people actually trying to implement it do want to make it work. So that is around. Now, how it's rolling out, we said about whether you qualify or not. So I think the first thing to think about is all based on your turnover. And this is a really, really important thing to picture. Turnover, sales, top line income, not profit. So if at the time of recording this video, you do your tax return, so say you're in business right now, you've got a tax return to do for the 24-25 tax year, which is due on the 31st of January 26. If your income for your sole trade business, when combined with any rental income you've got, is over 50k, then you're going to end up in the system. And it's turnover, not profit. I have to keep saying that. And your other job income doesn't make any difference. It's just that self-employed and that rental income. Those are the ones that most of you are going to be looking at. And then you would not do that tax return from the 6th of April 26. You're now in Making Tax Digital, and you're in the system. You have to keep these records digitally. You have to submit your quarterly returns, and that's at 50k. Now you might think, okay, well, I'm under 50k, sweet. However, they're lowering the limits over the next few years. So the following year, it's going to be a 30,000 limit and you're in, and then it's going to be a 20,000. So for example, if your income is over 30,000 in the next year, you're going to be in the system from the 6th of April 27. And if it's over 20 grand, then you're going to be on the 6th of April 28. So they haven't announced more plans at the moment to lower that turnover. And that turnover figure keeps changing, actually. It used to be really low, and then they kept upping it, and then they've brought it back down. So I think they're still trying to find their feet with where to place that. but you've got to presume that it's basically come in for most people. Side note, at the minute, they had said originally they were going to launch this for limited companies. However, there's no rollout at the moment for that. So that's a side note. And at the minute, partnerships aren't on there. Now, partnerships is an odd one because it's very much look and feel a lot of the time like a sole trader business. But I think it's just technology, in all honesty. There's so many moving parts with that. It's quite hard to do, I think. So that's on the back burner as well at the moment. So if you're in a partnership, at the moment, it's not actually affecting you currently. Now, I'll link a tool in the description if you think, especially as, this is a podcast, you might be thinking about and about, you spoke a lot about numbers and dates there. I'll link a tool in the description that the revenue have made. You can put your details in. It tells you when you're going to be in. So that'll be there. So you can check that out. But if you're moving around and you don't want to look up podcast descriptions, just go to, just put HMRC Making Tax Digital tool or something into Google, it'll come up. Now, if you've just started your business as you're listening to this in the middle of 25, you won't actually likely need to worry about this until the 6th of April 28 is the earliest you would be enrolled. For many technical reasons, I'm just going to completely skip over right now because it's a long, boring process. But just know if you're in business now, the 6th of April 28 is likely the earliest you're going to be in. But please do prepare. Don't switch off now, and I'll talk to you about what we've got to do. Now, you might be thinking, this sounds horrendous then. I'm going from 1 tax return to 4 quarterlies, plus this year end, plus maybe more returns if I've got a rental property alongside my self-employed business. Why are they actually doing this? Now, the revenues say, and this is from a paper that was initially the kind of the launch paper back in 2015, and so I presume it's moved since then, but they say that taxpayer error is worth about £8 billion in missed tax a year, and they think that this will help reduce it by at least 10%. So it's quite a bit of money. Now, the initial report, they thought the average business would only incur a transitional cost of a one-off £280 back 10 years ago now, and then to implement, and then they would see ongoing cost savings. Now, there's been various committees and people who have brought the revenue to task on this, and I've still not seen any provable thing that says that the business is going to have especially cost reductions. I don't think that's going to be a case at all. One thing that is going to be possible, depending on the software that we'll talk about in a minute, is you're going to see an in-year tax calculation that might help you plan your tax bill. But there are problems with that in that it's not taking into account adjustments and other sources of income. So how accurate that's going to be for you is a really big question. But that's a potential if your affairs are quite simple. But anyway, I don't know what the benefits are. And I think many owners and accountants don't see what it is. I think the benefit is very much one-sided to the revenue. But if that's where we're going, that's where we're going. The one thing I would say, though, on a myth buster on this is I think people instantly, I've seen it across social media over the years when we've been talking about this, people say, then they're going to ask for quarterly payments. At the moment, as I understand it, and I've heard this from the horse's mouth, there are no current plans or infrastructure being built for quarterly payments. So I don't think that's a thing at the moment. I'm not even sure if they know what they're going to do with the data, but they're getting it is the first stage, I guess. So at the minute, there isn't this move to quarterly payments. The existing system is still staying. And I suppose while we're on the subject of myth busting, let's do this one. In that people are like, it's great for accountants then, isn't it? No, I'll tell you that as a business accountancy owner, as somebody that talks to a lot of other accountancy owners, nobody actually wants to do this. And the reason being is it's very hard to staff because of the deadlines we're talking about, where if you imagine, let's say you do your first quarter and you've got 30 days plus 7. Now we do this it's identical basically deadline to what VAT is. And I can tell you how this works in practice is we would love everybody on the first of the month to give us their stuff, and it all comes in and we get 37 days to communicate and do it. It's just not how the world works. Everybody leaves it till the last minute or late, and you have to ram in a load of work at the last minute, and there's inevitably queries where stuff's missing and you're trying to save last minute tax. Now imagine having to staff that for like hundreds and hundreds more people in a short period. It's actually a real problem. So I think what a lot of accountancies will end up doing, and this is why you need to do something about it now, is I think that they might support you with the year end as they would normally, but maybe ask you to look at quarterly submissions. Although absolutely, like we'll have fully supported services, that will be a solution that people will do. But to think that it's driven by accountants is definitely a myth. Nobody actually wants to do this. It reminds me of when the reporting change to payroll came in and pensions and things like that. Accountants were not excited about doing it. It's still super low margin service that people don't really like doing. It's not great. So that one definitely, I can tell you, is a myth. But I am excited about bringing more people into the digital revolution, though. That's the one thing that is really cool. The problem, I think personally, and this is a slight rant, is that it's not right for everybody, and being forced or mandated, as the term is often called in this MTD world, into having to do it, I don't think is healthy for small business. We've already got a massive tax burden in terms of admin, and the rules are complex and all the rest of it. Adding more burden on the small businesses trying to get the hustle on and actually make some money and survive in a very tough economic market, it's just like, bad, tax rates are high, employing people's horrendous. Like there's all this massive storm that makes the UK more and more difficult to do business in. And I don't think forcing people to do it. I do love the fact though that people are going to be on software. Software is really, really good. So I think then let's talk about what you need to do, because actually what you need to do is where the software comes in. So there's two elements to this. I think the first one is go and look at the HMRC tool and check when you're going to need to come in. So just quickly recapping that, if your income's over 50k on the last tax return, the one you're doing now, if you've already done it, or the one that you're going to do before the 31st of Jan 26, you're going to be in. If you're self-employed, turnover and sales and rental combined is over 50k. And then that same rule applies to the next year if it's 30k and the next year if it's 20k. So go and have a look at that. Now, big thing. So then the main thing for you is workflow and software. So there's no free HMRC. They're not coming out of currently. There is no plans for them to do it. What I understand from the communication I've had with the teams there is that effectively they hope that the market does a much better job of making the tools really cool. And I actually get that. I do think that's cool, because they would obviously make a tool that is just a bit like, just submit us your lines. But I think software companies will do a better job of maybe helping people use the tools better and making it a bit more useful. So that's going to exist. What I would say though about the software, so at the minute there's a list on the revenue site of all the different softwares, but they're not made equally. As somebody who spent a lot of time looking at this and talking to software vendors, they're very different and they're all in different stages of processing. So right now, some will do different things. So for example, you can use a spreadsheet. There's nothing wrong with a spreadsheet. In the industry, we tend to call it bridging software, but basically it allows you to highlight cells of a spreadsheet and transmit the data. Those tools exist and they're super cheap. So that's definitely an option for you still if you want to do that. The problem with them is often they're one-way transmitters. They don't suck data back down from the revenue to give you tax calculations. And we're not entirely sure yet, because I haven't seen one do it, as to how if they can even manage the end final submission, because you've got adjustments and things to do. I think that's going to be a big question mark. But again, as the time recording this, it's all in development, weirdly, considering it's coming next year. So do have a look at what they're going to do. Do they do at the end of year one, and do they suck data up and down? That's the best term I can think of it, as how I picture it working. So, but there is a website you can view. Now, for me at the minute, there's two, and it's not surprising if you listen to me, there's two big ones I think that I would be looking at to talk to owners about. The first one, of course, is Xero. Xero for me is still the best market leader all-round solution, and you can pick up yourself a great discount if you're a new customer to them at heelandassociates.co.uk/Xero. Now, they've released a new plan. They call it the Simple Plan. It's only £7 a month before discount, and that'll allow you to comply with this and get it done. And actually, it will connect to your bank and it will do some invoicing. Like all the main features are there. Will do for sure a more detailed software breakdown. But I want to put that one in your radar early, because for me, what's great about it is it's a growth journey. As your business gets bigger, you can just upgrade your plan and it just rattles on to all the cool features that I would want you to do anyway. Like if you ask me now what the best software is, I'm going to tell you to go Xero. So that one's there. However, we have an absolute ton of clients on QuickBooks, and QuickBooks have a cool solution as well. So I'm not saying that this moment in time you might have a different need, and there are times where QuickBooks will fit your bill better, maybe on features, or if you're a mobile centric, actually the mobile app on QuickBooks can be a little bit better. But for me, I would not really advise doing bookkeeping on an app anyway, so I don't see that as a big issue. But for some people, if they're obsessed about mobile experience, QuickBooks is I'd say probably slightly prettier, but Xero for me, market leader. So if you're thinking of getting there now and you're like, I just want to get ahead and get it done, Xero's the way forward on that. But there are loads. You know, I could list them, but go do your research at this moment in time. I think if you're working with an accountant, go speak to them. We've all got our favourites, so go and have a look and just chat to them about their support options. I'm sure they will be supporting you. The problem I have is, I think for many people, when you ask them right now, they might not be able to tell you how much it costs and what it looks like, because we really don't know what work's required at the moment. It's a very difficult moment in time in the middle of 2025. So anyway, so that's there, but absolutely we'll deep dive. So for you now, check when you're going to be in and get some software. And if you're thinking, actually, my turnover isn't 50k, it is even 20k, I still think getting prepared and getting in that software. And I've been talking about this for years, just because I do genuinely think being in digital world now is the place you should be for your business records. So either way, go and have a look and just remember, you can use a spreadsheet. Currently, I'm just not convinced it's going to be the all sing and all dance sort of solution you need to deal with the year end. Now, finally then, how to avoid, because you might be thinking, I ain't doing this, there's no way. Well, unfortunately, there isn't many ways to avoid it. The only real ways, that's little bunny ears for those of you listening that I'm doing while I'm talking avoid it. You've got a couple of things. You could obviously form a partnership or go limited. Those things aren't without tax consequence or costs though. And arguably, particularly with the partnership, I think you're only just delaying the inevitable. With companies, I think you're going to give yourself quite a few years. And I think depending where you are with your profits, going limited can be really good for lots of other reasons anyway, but they are costly things to run. You're adding cost again. So when we go back to our original, this impact study that the revenue did about this 280 transitional costs, I don't think they probably presumed that people would jump into being limited and that cost there, but that would force you to have more of a cost just for filing those limited accounts. Because on this theme, if you've heard me talk about this before, the free HMRC tool that they used to provide for limiteds, which was very limited, pun intended, and people did a bad job of using it anyway, but they're actually withdrawing that at the time of recording as well. So even then, if you're limited, you can generally end up with an accountant or a filing service to do that. So you could do one of those two things. You could obviously get your turnover under 50, under 30, under 20k, but why are you in business if you're trying to reduce your turnover? But I think if you're very close, like if you're at £19,800 and it's coming towards the end of your year, you might be thinking, actually, if I prepare my accounts on a cash basis, so I just send to the revenue on my tax return what comes in and what comes out, maybe I don't collect any more cash in the next couple of weeks to make sure I'm under the lazy year. But at the end of the day, you're going to be in. But there is that outside of religion and other digital exclusions, that's really all you've got. But on a serious note, if you have got a disability or some sort of religious area that means that you can't use tech, there are actual exclusions, so you can go and check those. So go and find out, and absolutely you will find there are genuine exclusions. But yeah, the short is there is no real way to avoid this. So that's where we are with Making Tax Digital. So go check that software out. As I say, for me, if you're looking to get into software, always Xero, HeelanAssociates.co.uk/Xero for a nice deal. It's a crazy deal at the moment that's on there. Now then, if you have enjoyed this show, make sure to share it with anybody that you think needs to know this information, particularly if you've got self-employed people. I know what it's like. Tax is never the first thing anybody is listening to. The fact you are listening to this podcast, you're one of the few, and I love you for it. So please do share it with everybody else that's not thinking about these things. If you have enjoyed it, make sure to subscribe via your favorite app so you get notified whenever these things come out, and it does help our visibility if you get a chance just to leave us a review and share a few thoughts if you can. For more business insight and tax tips, be sure to connect with me and my great team across all the social media channels, including of course YouTube, LinkedIn, TikTok, Twitter, Facebook, wherever there's a social media channel, we're on it. Maybe not Snapchat. So on all of those. And you can also sign up to our 2-weekly HeelanHub Herald, which is a email direct to your inbox with tax tips, guides, all sorts of infographics, loads of stuff. If you go to our website at HeelanAssociates.co.uk and scroll around for literally a few seconds, you'll get a pop-up to do that. And that goes an email straight to you. And if you do want to get in touch specifically about the podcast, you can do so at info@HeelanAssociates.co.uk. That's it. Have a profitable, tax-efficient couple of weeks, and I'll see you on the next one.